Hello everybody, can you all hear me? Please give me a confirmation in the chat that you can hear me all right. How are you all? I hope you are doing okay and you are getting ready for the exam. I also hope that this last session will serve to ask and answer any question that you might have. So I have prepared something that I want to share with you first, and after I have finished, we can start by taking your questions if you have any, okay? So regarding what I've prepared to discuss today, first a short summary, a debrief of the second part of our course. What are the main contents and what you should expect to find in the exam regarding each of the chapters. Of course, we cannot ask you about everything that we have discussed about. There are only selected topics and selected contents that will be included in the exam. And regarding that, I want to give you some ideas what to expect. Also, I have prepared a short, let's say, share about the structure of the test, even though you already know that, and also some exercises by the end of the session today. So in case you do not have anything that you want to ask me before I start, is there anything that you want to ask before we start the presentation together? Something that you really want to know right now, you do not want or you cannot wait until the end to ask the question. Is there anything that you want to ask? Or we can start and then you can present your questions. What do you think? Can we start right away or you want to share with us something first? I see that we have a good number of participation. That means that you are really interested to either to ask questions or to listen to whatever we have to share today. So in case you do not have to ask anything for the moment, I'm starting, and then we can turn this into a discussion, hopefully. So I think that the first chapters or the first topics, maybe we have already forgotten that. Only if you have already repeated the content, but I just want to remind you about what actually we have discussed in each of these chapters. We started with discussing the IS2 and IS41. They were closely related to each other, but actually they are not equal in their importance. The main topics that we discussed about the inventories, for example, was cost of inventories, what to include and what to not include in the cost of inventories. And IS2 was specific what is allowed or not allowed to be included in cost of inventories. Methods of costing the inventories. We learned that there are several methods, starting with FIFO method and also the weighted average method as well. They were pretty much covered in detail, both of them. So you should right now have had a look at how we calculate the cost of goods sold regarding with the method first in, first out, or the weighted average method as well. Then some certain topics related to the cost of inventories also covered the comparison between cost and net realizable value. Remember that the lower between cost and net realizable value is to be used for inventory costing at the end of the period. This is a really important concept that we have mentioned several times until now, is to be used at the end of the period to value the inventory. This is somewhat the content related to inventory is the most important topics that we have covered related to inventories. Later, I've prepared an exercise that will explain again the FIFO and weighted average method. But for the moment, this is like the main topics that you have to remember. So we have several methods. We have some items allowed or not to be included in the cost of inventories. And also there is this requirement that we should always use the lower between cost and net realizable value. Okay, so what you should expect to find in the exam related to the inventories. Okay, you have to expect to have an exercise. So of course you will have an exercise related to inventories. This is an important part of our course. And actually I'm disclosing that that exercise will be related to the methods of costing. So of course we cannot ask all of these things from you in a short exam. We cannot ask whether you know the costing of inventory, whether you know the methods of costing, whether you know how to evaluate inventory at the end of the period. So I've decided that the exercise that will be in the exam tomorrow will be related to the methods of costing. And of course, expect to find multiple choice question and true or false. So probably you'll have multiple choice or true and false questions, either related to inventories or related to the agricultural produce. So of course, the IS 41 standard is a short one. There will not be an exercise about that, but please expect to find a theoretical question, either a multiple choice or a true-false question. So again, we are coming back with inventories later to have presented this exercise over here related to the methods of costing. So for the moment, I am continuing with the second topic that we covered in our course. That was the insurance contract, exactly IFRS 4 and IFRS 17. And there is a reference, there is a whole chapter in your textbook about that. What we discussed about as main topics about these both standards. First of all, we mentioned that IFRS 4 is a kind of is an intermediate standard. That means that is in place only until IFRS 17 is going to be effective, actually starting from January 1st, 2022. That is, we have to ready to know and to have here a standard which is not yet effective, and therefore our focus and our emphasis will not be very much on this topic. So what you should expect to find about insurance contracts is no exercise, of course. So we'll not have any exercise related to this topic. Now, don't be misguided. In the first year, in the previous year, you had an exercise about the insurance contract, but this year I have decided to have no exercise there. So all you should wait in the exam content about insurance contract is either multiple choice and true false questions. So both of them may be used to test your knowledge about the insurance contracts. Of course, what you should remember is what is the fulfillment cash flows and the contract service margin. So both of them you have to remember, you have to know what do they mean. Fulfillment cash flows is a summarization of all the expected cash flows in the future. So basically, fulfillment cash flows is the sum between present value of future cash outflows, present value of future cash inflows, adjusted, that means usually minus, adjusted with the non-financial risk factor. Non-financial risk factor usually is expressed in amount with dollars or something, so you should actually need to know that the fulfillment cash flows really summarizes all these three components together. Whereas the contract service margin at the inception of the contract should be equal to the fulfillment cash flows, so as we do not recognize any profit for the contract upon receiving its premium. So this is all I think you need to remember about these two standards. This is something that probably will help you in the test. Again, there is no exercise. There will be only one or two multiple choice or true false. So this is like the focus that you should pay and the attention you should give to this chapter. As it is only theoretically covered, I will continue with something which is important. That is a cash statement of cash flows. Now, there are several topics there, 3 sections of the statement. Now, you need to know what is included in the operating activities, investing activities, and financing activities. So you should actually know the contents and item to be included in each of the 3 sections of the statement. You should be familiar with that. And also you should be familiar with the direct method and indirect method. So direct and indirect method should be both of them familiar to you. Of course, again, we will not ask to prepare a full cash flow statement. So in the exam content, you will be having an exercise, of course, a full exercise related to the statement of cash flows. I am advising that you should leave this exercise for the end of the test, because it requires time and probably you would like to leave that until the end, so this will not take time out of the other questions that you might have. So you will have an exercise. The exercise will not require you to prepare a full cash flow statement, but will require you to prepare a section of the statement. So either calculating CFO, CFI, or CFF. You will be required to show how to calculate cash flows from operations, or cash flows from investing, or cash flows from financing. So you should be prepared to do that. Of course, I'm emphasizing once again, the statement of cash flows is regarded difficult. I'm trying to keep it simple, and something that you will be facing with in the exam is something that you have gone through during our tutorials. So the exercise that will be included in the exam will be similar to those that we have discussed in the tutorials. But again, expect to have an exercise. Will there be any multiple choice and true false? Yes, there will be some multiple, maybe one multiple choice and maybe one true false related to the statement of cash flows. Okay, so this is something that I wanted to share. Until now, prepare to have exercises related to inventories, exercise related to statement of cash flows. Okay, so let's continue with the segment reporting. Now, this is another chapter that we have treated and covered only theoretically. We have discussed one exercise, of course, but do not expect to have any exercise in the exam. So now exercise about this chapter in the exam, only true or false and multiple choice, theoretical multiple choice questions. So again, this is something that you have to remember. Something important to remember about the segment reporting was the idea that it followed the internal point of view or internal perspective of reporting segments. Remember what is the chief operational decision maker? Maybe you will have one theoretical question about that. Remember the 3 thresholds to classify a segment as a reportable segment. So again, these are like the main things that you need to repeat about the segment reporting and related to the tomorrow's exam. So now exercise, just something theoretical related to how we include the reportable segments in the total to be reported, what is the chief operation decision maker, and also the thing that reporting segments, usually companies follow an internal perspective, an internal classification. So that is all about chapter 4. Something about chapter then topic number 5, this is earnings per share. So of course, you should expect to find an exercise over here. So what are the main topics to discuss? What is basic earnings per share and diluted earnings per share, which is the difference between them? Basic will usually take into consideration the current common shares, whereas diluted earnings per share will be calculated in those cases when the company will have some dilutive securities outstanding, if the company have them. So remember that you will have an exercise either covering basic earning per share or diluted earnings per share. So in one exercise, I'm not going to ask you both about that, okay? So either basic or diluted. You will not have time to cover both of them in one exercise. But also remember that both of them, basic earning per share and diluted earning per share, are impacted whenever we issue either a bonus issue or a right issue. So remember that either bonus issue or right issue will be in the exam tomorrow. Now, related to the bonus issue, remember that something important is the bonus factor or the bonus fraction. Actually, the bonus factor is the ratio between number of shares. So number of shares after the bonus issue that is related or compared to the number of shares after the bonus issue, okay? So this is something that will help us treat the bonus issue. Of course, we also have the rights issue. Remember that we also, in case of rights, we have a rights fraction or factor, which is in this case not the ratio between number of shares, but the ratio between share prices. So that is share price before the issue divided with we call that a theoretical price, X price, because it's not really related to something in practice, but it's something that we calculate following a certain formula. So share price before the issue divided with theoretical X price after the rights issue. So that is like the formula that we follow to calculate the rights factor or rights fraction. What is the theoretical X price after the rights issue? That is the division or the ratio between the total value of shares after the rights issue with the number of shares. The total value will be the market capitalization before the rights issue plus the proceedings from issuing some new shares divided with the new number of shares after the rights issue. So again, remember that the main topics in earnings per share is either basic, I will get to the chat right now, either basic or diluted. So maybe this is more clear now. Either basic or diluted, only one in the exam. And then you will have either bonus issue or a rights issue. Only one of them, not both, because you cannot deal with both of them. You will have exercise and also maybe you will have some true false as well, and maybe multiple choice. Again, true, false, and multiple choice will be maybe 1 in case I decide to include them, but certainly you will have the exercise. Can we have the question in chat from Alessandro and Erica? Yes. Okay, let me see. Maybe it's there will be exercises about rights issue or only theory about rights issue. Erica, I don't know that yet. So again, I'm mentioning what is important for you to repeat for tomorrow. Maybe I will include bonus issue only. Maybe I will include rights issue only. I do not know that. So okay, Erica, the formula, bonus factor, number of shares after. Yes, thank you very much. I guess I thought before or prior, and then I wrote differently. Thank you very much for bringing that to my attention. Thank you. So number of shares after to number of shares prior to the bonus issue. Remember, as we are talking right now, remember also that whenever we calculate the bonus factor, we can use the inverse of bonus factor to facilitate the calculations. But yet, I've prepared an exercise to look at after we go through the theoretical part. So again, we'll have an exercise together to clarify the earnings per share. Okay, I'm glad for whoever has been preparing for the exam. Whoever has read the theoretical part and the exercises, I think that will not find it difficult the exam because it is following the guidance that I'm giving you all the time during the lectures and also today. So please pay attention to what is important for tomorrow. Of course, we have delivered a lot of information together. I've spent hours to explain things that maybe you are not asked right now in the exam, but this is always the case, right? We cannot ask you about everything that we explain. For example, we spend a lot of time covering the insurance contracts in details, how to calculate the fulfillment cash flow, how to calculate the contract service margin. Again, I cannot ask you everything that I taught to you during this course. The same thing with segment reporting. We shared even some exercises together, but we cannot include an exercise about segments in the exam. But we will do about earnings per share, so let's continue. Interim reporting, of course, no exercise in here, only true, false questions and multiple choice. And when I say true, false, or multiple choice, it may be 1 or 2 of them. So keep in mind what is important to remember about interim reporting. The format of financial statements, that is something that you need to know about interim reporting. Remember that the companies may choose either a full set of interim reporting or a condensed set of interim reporting. So the format of financial statements is something that you would like to remember and bring with you in the exam about the interim reporting, and also the approaches that the company follow to format and to access the interim financial statements, either discrete or full capacity. So the approaches is something else that you need to remember. Only these two things I think are important to have with you about interim reporting in the exam. And of course, then we have the basic ratio analysis, which has a lot of ratios, of which you should know the formulas and interpretation. So we have liquidity, performance, and investor perspective ratios. And we have to know all of these ratios, formulas, and interpretation. Of course, expect to have an exercise over here. Expect to have an exercise that is related not only on how we calculate the ratios, but also how we interpret them and how we connect the interpretation of the ratios to each other. I would say the same thing about the techniques of financial analysis. Remember that we have ratios. Remember that we have also vertical and horizontal analysis. Okay, So all of these are important to perform a full set of financial analysis to our financial statements. What will be in the exam content? I think that will be one only exercise related to both ratios and techniques. So expect to have one exercise that will require you, for example, to calculate the return on equity or return on asset. So will be the same exercise that I mentioned before, but also expect to find some true false and multiple question related to the theoretical part of this chapter. So will be one exercise with ratios, and when I say the same exercise, I am relating together chapter 7, basic ratio analysis and techniques of financial analysis, but also expect to find some true false and multiple questions, simple ones related to mainly theoretical stuff, okay? So then we have industry and accounting analysis. The main topics that we, Erika, exercises, no. I will not ask you to perform vertical and horizontal analysis in the exam. I've mentioned that before. That requires time to make all the calculations that are related to vertical and horizontal analysis requires time. But you maybe will have a question asking you to interpret vertical and horizontal percentages. So listen to me carefully. There will be no exercise that will require from you to perform calculations related to vertical and horizontal analysis, but maybe you will have one simple theoretical question that maybe will ask you about the differences in percentages and will ask you to interpret that, okay? So this is all about vertical and horizontal analysis. I'm jumping right now at chapter 9, industry and accounting analysis over here. So which are the main topics? Remember that the analysis of business strategy is one topic here, important. How the company has decided to offer its product, how the company has decided to be differentiated from its competitors, either through cost, leading in cost, or leading in product differentiation. That is two different things. And also the incentives. Another thing that you should remember from the accounting analysis is the incentives, the discretion. So the opportunities, the discretion or the opportunities, that's the same thing. And the techniques managers use to perform earnings management. So these are like the most important stuff you need to take away from this chapter, which are the incentives related to bond contracts, related to shareholders contract, related to employees contract. What is the discretion? So the opportunity the managers have to perform actually accounting manipulation, and also the techniques they use. There are basically three techniques. The first one from the techniques, I'm just putting them in here in the bracket. The first technique is through accounting methods. The second one is through who want to say something. The second one is the accounting estimates. Accounting methods require you to have a retrospective adjustment, and that is not preferred a lot. Accounting estimates, though, do not require you to make adjustments in retrospective, sorry. So that is really preferred and in favor from many managers. And the last one is the actual real transactions. Now remember also that the first two accounting methods and accounting estimates, they will have a reversal effect in the future, whereas the real transactions usually don't. So that is something that you have to keep in mind. Of course, the exam content, there is no exercise related to the industry and accounting analysis. I know that we discussed some examples together, whether in which we decided whether a company was following and disclosing qualitative, high quality or low quality earnings, and that is a very interesting topic to discuss, but we do not have time to discuss that during the exam, so no exercise about that. But of course, expect to find some true or false and multiple choice. So you have also to keep in mind that whatever is the chapter that is not covered through exercises will have one or two true false question or multiple choice. Okay, so remember this. And the last one, non-financial reporting and non-GAAP indicators. Of course, no exercise here, only theoretical questions. Again, related to this chapter, we saw some one or two mini cases, very interesting to discuss, but of course we do not have the possibility to include many exercises in the exam. Which are the main topics to remember here is the financial KPIs and the alternative performance measures. Remember what is the, for example, free cash flow. What is the meaning of free cash flow? What is the meaning of underlying profit? What is the meaning of the financial net debt? So these very important indicators, you should know the meaning of them, and you should be able to answer one or two theoretical questions in the form of true or false and multiple choice. So this is basically what you are expected to know from all the contents that we have shared together, okay? So about the exam structure, some information over here. The exam will be 90 minutes, as you already know that. It will start tomorrow at 9 a.m. I wish all of you good luck. I will be following online with some of the students, but not on site. You will be there with Professor Alberto and Professor Simona. You will have 10 true or false questions. Each of them will be evaluated with 1 point, and approximately you should spend 1 minute for each of them, not more than 1 minute. I'm giving a very abnormal time here. Probably some of you will need less than 1 minute, only 10 seconds, and then you will have the answer. But I'm just guessing that approximately you will need 1 minute for each of them, true or false questions. Then you will have multiple choices. This year I have decided to include only 5 of them, not 10. So only 5 questions, multiple choice over here, and you will have 10 true or false questions, okay? Each of them will have 2 points, and you are expected to spend 1 to 2 minutes for each of the multiple choice. Some of you may spend only seconds because you may already know the answer, but I'm just guessing, I'm just assuming that in general, on average, you should spend 1 or 2 minutes for each of the multiple choice questions, okay? Whereas the exercises will be 5 exercises. They will require you either calculation, interpretation, or comments, or all of them. So 1 exercise will be with calculations, 1 exercise will be with interpretation only, 1 exercise will involve both calculations and comments as well. So expect to find 5 exercises, and also keep in mind something. The exercises will be like 80 points in total, so the majority of the points will be related to the exercises, and you are expected to spend more than 1 hour to solve the exercises. Whenever you are asked to show the calculations, do that. Whenever you are not asked to show the calculation, just keep this in your mind and don't spend extra time showing unnecessary information about the exercises, okay? Something else that I wanted to say is that you are going to have the exam online using the Moodle platform, and that is a major difference from the exam in the first part. In the first part, you were writing in paper, and now that is different. Valeria, yes, you can have blank notes to keep, you can have blank sheets to keep notes. Yes, you can do that. But you are required to write the solution of the exercise on the Moodle page. And that is not the same, so I will strongly encourage you not to lose time taking notes, and then you not have time to put the solution on the Moodle page, okay? So today, after we finish, we will try to solve some exercises, not on Moodle, but we will try to solve some exercises on a blank Word page. So you can know what it is to write, not in Excel sheet, not in PowerPoint, not in a notebook, but in a electronic page, like a Word page. Moodle also gives you the opportunity that whenever you ask Claudio, I think you can have a calculator. I don't think that it is not allowed. It is allowed to have a calculator, but a calculator, not a phone. Not a cell phone, please. Okay, remember, a calculator is allowed, but not a phone. So what I'm saying is that the format to provide answers will be a little bit different. So I'm just trying to encourage you to solve the next exercises right now in a Word page and to see how it goes. Okay. I don't know if you have any question before we start with the exercises. Do you have any question about the content of the exam, about the time for each of the questions? Do you have anything to ask? Okay. Maybe you do not have any question right now. I'm okay with that. So stop sharing this Word file. It just served us to keep the discussion together written somehow, written somewhere. So I have, as I said, prepared some exercises. That does not mean that you should wait and expect the exercises tomorrow to be the same as those that we are sharing right now, okay? So again, do not expect the exercises in the exam tomorrow to be the same as these ones that we are discussing. These are just exercises related to the chapters that I identified will be asked through exercises. That is, you'll have an exercise with earnings per share, you will have an exercise with ratios, you'll have an exercise with inventory, and one exercise with cash flow statement. And therefore, as we also and another exercise with cash flow statement interpretation. I forgot the last one. That means that we are focusing right now on those areas that will be asked from you through exercises. Okay, that is something that I wanted to clarify for all of us. And also, in order to be able to show how to solve an exercise in an electronic format, not in a written paper, we will use not Excel file anymore, because you cannot use Excel during your exam, but we will show the solution of these exercises right here in the Word page that we are explaining through. Remember that the Moodle format resembles a lot to the Word page. There is a space there that you can write directly into that. Okay, so that's why I am trying to solve the exercises on the Word. Now you see, this is an exercise about earnings per share. We have information that related to this year, a certain company has net income and also has declared and paid dividends on preferred stock. The company also has the following common stock information, and you can see that we have something original and different from what we have discussed during the lecture together. We start with 1,200,000 shares. We issue some new shares on 1st of April, that is 3 months into the financial year. And then we repurchase, on October 1st, we repurchase some shares. Okay, we have a question. One, will you be uploaded these files? This one, it will be uploaded. The one that we are using to solve exercises will be uploaded on Moodle. Okay? So, but you will have information about that, but still, I don't think it's very useful so much in proximity to the exam tomorrow, but still you will have this one uploaded in Moodle, okay? So this is something new that probably we have not discussed before, but no difference about that. The case when the company not only issues new shares, but also retrieves from the market. So right in October 1st, the company repurchases that are known as treasury shares, if you remember. And then we have the closing amount of outstanding shares, 1,300,000. Now, the first question is, what is the company's weighted average number of shares outstanding? According to the IS 33 requirements, we have to calculate the basic earnings per share by dividing the net income available to common shareholders with the weighted average number of shares. That is, that we should take into account the amount of time that actually each share or a group of shares has been circulating or has been outstanding. So we start with, actually on 1st of January, which we start with 1,200,000 shares, and they are outstanding for only 3 months before 1st of April, when we issue some other shares. So for 3 months, we have outstanding 1,200,000 multiplied by 3 divided by 12 months, and then we can calculate an approximate amount of 300,000 shares over here. Then in 1st of April, we issue 300. So that means that for the rest of the months, we have 1,500,000 shares that are around for how many months? From 1st of April to 1st of October, when the next movement in the number of shares will be, there are, if you can count the numbers, there are 6 months. That means that for 6 out of 12 months of the year, we have 1,500,000 shares outstanding. That means that we can perform this calculation over here. 1,500,000 shares multiplied by 6 divided by 12. And if we make all the calculations, we find here 750,000 shares. We continue because you remember we have another movement, another change in the number of shares. That means that after we retrieve 200,000 shares from the market, I'm not left with 1,500,000, but I'm left with 1,300,000 shares. So again, I start with this amount. Then after I issue 300,000, there are 1,500,000 shares outstanding in circulation. After we retrieve 200,000 from the market, we are left with this amount of shares, and they are actually outstanding for only 3 months out of 12. So for the remaining 3 months from 1st October to 31st of December, we have only 1,300,000 shares. If we perform the calculation, that would be 325,000 shares. That means that the weighted average number of shares is equal to the total sum of all these components, 1,375,000 shares for the 2019 that we are discussing right now. So this is how you should disclose the solution of such a requirement. If you are using a Moodle page, it will be similar. The space that you are required to do the calculations will be the same, just show all the calculations as required. Is it everything understandable? Do you have any questions so far? Again, we are doing the calculations only of the weighted average number of shares outstanding. Now, we have another request over here. What is the company's basic earning per share? Remember that the basic earning per share is the ratio between net income available to common shareholders that is divided to the weighted average that is divided to the weighted average number of shares outstanding over here. Okay, so again, I'm performing the calculations. This is like the formula that we use, but if we try to calculate for the specific data that we have, we would calculate net income available to common shareholders as the difference between net income less preferred dividend. Now, that depends on several cases. Sometimes in some exercises, it is readily available, the amount of net income available to common shareholders. In this case, it's not, and I have to calculate it before. We have the net income, and then we have the preferred dividend. So I have to calculate the net income available to common shareholders as the difference between the net income and the dividends on preferred stock. And of course, that is divided with the weighted average number of shares outstanding. Okay, so let us replace in this formula over here. 3 million was the amount of the net income. Preferred dividend was 500,000. So this difference between both of them will be divided by the weighted average number of shares, which is already calculated in the first requirement over here. Okay, let's see what we have in the chat. We have a question. The shares of April? Yes, that would be exactly 9/12 if I didn't have the treasury shares over here. So again, to the student who was asking, if I didn't have this information, yes, shares issued in 1st of April will be in circulation or outstanding for 9 months. But that is not true because some months later, exactly 6 months later, in 1st of October, I am retrieving, I'm taking back from the market some shares. Okay? And that means that I'm left with less shares. That is why we perform the calculations like this. Okay, thank you. If we go back to calculating the basic earning per share right now, over here, we can see that the basic earning per share, the division between both of them is 1.82 cents per share. Sorry, this is dollar per share. Okay, that is fairly easy until now. Now look at the look at the last requirements over here. Assume that on 1st of December, a bonus issue was announced. Each shareholder of record, that means with each shareholder that is already in the books, has the name in the books as an owner or as a shareholder of the company, will receive 3 shares in exchange for each 2 current shares that she or he owns. Okay, remember this. What is the basic earning per share after accounting for this bonus issue? Okay, so this is the bonus issue moment that I was discussing before. So let's start with the bonus fraction, which is really helpful in these cases. Remember the ratio between number of shares after the bonus issue related or compared to the number of shares prior or before to the bonus issue. Okay, so actually the bonus fraction will have 3 shares for each 2 existing. So that's pretty simple to calculate the bonus fraction as the ratio between number of shares. Okay, so this is the bonus fraction. Before we continue, it is also helpful to calculate the inverse of the bonus factor. The inverse will be 2 to 3. Okay, so now that we have this information over here, that is, we have calculated the bonus factor and the bonus fraction, we can easily continue calculating the earning per share. Now, for earning per share calculation purposes, remember that a stock split or bonus issue they are the same thing only with different names, is treated as if it occurred at the beginning of the period. That means that even though this bonus issue happened only 1 month before the end of financial year, we are at 1st of December, there is only 1 month left from 2019. We will assume, according to IS 33, we will assume that this happened at the beginning of the period, okay? That is, it can be calculated as initial basic earnings per share multiplied by inverse of bonus fraction. That means adjusted basic earning per share. Adjusted means after the bonus issue can be calculated as initial value multiplied by the inverse of bonus fraction. Okay, so let's try to put that into practice right now. How much was the initial basic earning per share prior the information of issuing a bonus or having a stock split? The basic earning per share was 1.82. So this is 1.82 over here multiplied by 2 to third, which is the inverse of the bonus fraction. Remember that this is also calculated a little bit before. Multiplied by 2 to 3, and we will have $1.29 per share, the adjusted earnings per share, that is after the bonus issue. Any questions so far? Any question you might want to ask? Yes, we have something. Let's take the question in the chat. Okay, Claudio, retrospective adjustment is exactly what we did right now. Retrospective means that we are treating that in the past as if it happened at the beginning of the earliest period we are given. And actually in this exercise, the earliest period is the beginning of 2019. We do not have another year in the past. We do not have 2018. In case there was information about 2018, yes, we would adjust the amount of 2018 as well. But the only year that we are presented with in this exercise is 2019. And therefore, we take it to the beginning of 2019 by doing the simplest thing we have been sharing together, simply by multiplying the initial value of basic earning per share with the inverse of bonus fraction. So again, I don't know if that answered your question. So I'm repeating, in this case, we are only dealing with 1 year. We do not have 2018 to make any adjustments. As we are here, I would like to continue. Actually, for the purposes of the exam, that would be all. Okay? Remember that. If you are in the exam and you are calculating this kind of exercise, that would be all you are asked to do. But for those that want to have another approach, maybe there are some of you that have studied other resources and you want to follow another approach, you will be also considered to be right. Okay? So alternatively, what we will have here, the adjusted weighted average number of shares for 2019 will be equal with the adjusted weighted average number of shares that we need to calculate for 2019 after the bonus issue takes place would be equal to the number of shares multiplied by the bonus factor. That means that we will start to calculate the adjusted weighted average number of shares for 2019 as 1,375,000, the number of shares that we actually know it's true for this year, but multiplied by the bonus factor 3 to 2, the adjusted number of shares that we would be taking into consideration would be 2,062,500 shares. Again, this is the adjusted amount of new shares after the bonus issue. And that means that adjusted basic earning per share would be equal to the ratio between net income less preferred dividend that is divided with the adjusted number, the adjusted weighted average number of shares outstanding after the bonus issue. And actually, if we make the calculations, net income, no change in that, 3 million. Preferred dividend, no change in that, 500,000. That would be divided with the new adjusted number of shares that we calculated after applying the bonus issue, 2,062,500 shares. And if you perform the calculations, you will certainly receive the same amount, $1.21 per share, as the adjusted basic earning per share over here. So this is something that you can use alternatively. That means if you want to do that, you are not required to show the calculation like this, but some of you may do, and I want to make sure that you are going to be regarded okay, as you are correct. Okay, what if the bonus was applicable before April? We are required to calculate it in the denominator along with the... Okay, yes, of course, always. Erica, whenever you issue the bonus, either in April, in December like now, or even in January or in July, whenever, that is not important because you will consider the bonus as issued at 1st of January, at the beginning of the period right now. So this is why we just cut it short and make the calculation right here like this. So because IS 33 requires us to go back at 1st of January, at the beginning of the period, we are allowed to make the calculation like this. So just simply take the number of shares and multiply them with the bonus issue whenever the bonus takes place. In April, in whoever, October, whatever is the amount when you do the calculation. Now, starting or having a justification, let's say from Erica's question, let's see how that changes if we make, don't write anything, we can make the calculations separately. What would we have if we make the calculations of the weighted average number of share separately? And just to have an idea about that, I'm just showing an alternative way, okay? This is not required for the exam, but just to make you sure that you know how to do that. If we calculate the number of shares, we will apply, except for the timing factor, we will also apply the bonus factor here. So if we calculate the amount like this, we would have, adding the bonus factor, the amount of the number of shares would change, of course. Here we would have, for example, 1,125,000, whereas for the last part, of course, we will apply again the bonus factor for all the classes of shares, and here we would have 487,500. Okay, this is the amount of shares. Now, if you add them all, not surprisingly, you'll have 2,062,500 new shares. So either way you do the calculations, either by multiplying the total number of shares with the bonus fraction, or by calculating each class with a bonus fraction, the result will be the same. Okay, so this is something that is alternatively, I'm repeating myself, this is not required. That's an alternative solution for some of you. They may prefer this long road, but those of you that prefer the shortcut, here it is. Just as we said, multiply the beginning or the initial basic earning per share with the inverse of the bonus fraction. Thank you, Erica, for asking and giving me the opportunity to present some alternative, some alternative solution. Okay, so I'm leaving you with that exercise about the earnings per share. Only 2 to 3 minutes break until I open the next exercise, okay? And we will continue. 2-3 minutes break only. Okay, I think that we can continue, right? Do you have any question about the first exercise? You see that it is either basic or diluted earnings per share, and it is either bonus or rights issue, okay? So you cannot have all of them in one exercise, but also recognize as well that the exercises may have more than one requirement. They may have 2 or 3 requirements different from the others. Something else that I wanted to add about the exercises was that sometimes the requirements are not interrelated to each other. So in this exercise, you might also have another question. For example, when you have an extract from the financial statements and you are required to comment and interpret, for example, the calculations of earnings per share for a certain company. So please take time that even if you don't know how to solve a certain exercise, you don't know the formula and so on, at least take time for the other requirements that want only interpretation. Try to give as much input there as you can so you can have those points, okay? So let's continue. The first exercise that we covered was regarding earnings per share. The second one is related to the inventories. We have over here, let me make it easier for you. There is a company that offers office supplies, yes, and they use a perpetual inventory system. That means that I have to keep track of the change in the cost of the inventory whenever we have a new purchase. Whenever we have some new inventory coming in the warehouse, we have to update the information over there. And so this is the information related to movements in inventory starting from 1st of October. We are starting with a beginning inventory of 2,500 units. You see the cost of unit, cost per unit is increasing with each purchase. Then we are purchasing on 15 of October and 20 of November. The first sale is in 3 of November and then on 10 of December. We also have some information over here. All purchases are in cash. All sales are cash sales. All inventory items were sold for $25 per unit. Actually, this is an information that I'm not gonna need because the information required from me over here is only calculate the cost of ending inventory and the cost of goods sold using the FIFO method, okay? So using the FIFO method is the one that we are required over here. Something that I will suggest is to start with the equation of inventory. If you remember, there is a certain equation that is always true in every case, and that will help me control the calculation that I will perform later. The equation of inventory says that the beginning inventory plus purchases of inventory should be always equal with the cost of goods sold plus ending inventory. Okay, so this is the equation that I will need to apply right now. But first of all, I have to show the cost of each component for each movement that we do to the inventory right now. So I know that before we have used Excel to solve the exercises about the inventory, and in Excel it's really very easy to perform different calculations, formula and so on. But how can we do that when we do not have the Excel spreadsheet? We are in a blank page like this, and this is similar to the Moodle page that you are going to have tomorrow. So we are required to show the ending inventory, that is one component, and then the cost of goods sold. So let's see what happens with each movement of inventory. I'm starting with beginning. Beginning inventory. Okay. Date, October 1. The beginning inventory. We are dealing with 2,500 units multiplied by a unit cost $16. That would be equal with, this is the time that we take our calculator and we make all the necessary calculations over here. So if we make the calculations right now, 2,500 units multiplied by $16, that would be $40,000, and that is the beginning inventory. That is one of the components of the equation of the inventories over here. That is the first one, okay? So we continue with the next date. The other date that we are having here is 15th of October. That is not like this. I'm using a certain different format for the date, but that's okay. So the first date, it is the opening inventory, beginning inventory. The second date is in 15th of October. We are purchasing purchases. The information that we have about the purchases is that we are purchasing 5,100 units at a cost, each of them, if you refer to the information, of $17. That means that if we make the calculations, right now, that will be like $86,700. That is the purchases of this date only. Remember that what I need here at the equation of the inventory is the total purchases of this 3 months period from 1st of October to 31st of December. So of course we can continue with the next date. It is 3 of November. Okay, we are selling right now. That means that I have to calculate the cost of goods sold. Cost of goods sold of exactly 5,900 units. At the FIFA method, remember that we are selling what we are finding the first or the earliest units that we find in the warehouse. Remember, first in, first out. In 3 of November, what we have is 2,500 units from the beginning, plus 5,100 units that are purchases at these dates, okay? So I have to decide right now when I sell, what will I sell exactly? First in, first out says that these 5,900 units will be first 205,000 units of the beginning of inventory, and each of them, that has cost $16. The total cost of these 2,500 units is already there, $40,000. You see, all this calculation is easily available here, and also part of these 5,900 units that I'm selling, it is another component, exactly 3,400 units from the purchases made on 15th of October. So again, whenever I'm selling this amount of units over here, I have to think which batch is actually referring to. In the FIFA method, I will start from the earliest units. So first of all, I will sell 2,500 units that I found in the beginning inventory, and then I will take from the latest purchases, that means from the purchases of 15th of October, and out of these 5,100 units, I will sell 3,400 units. Why? Because all of them together represent 5,900. So once again, 2,500 plus 3,400, that represent the total batch of sales happening at 3 of November. So of course, what I'm selling, 3,400 units from the purchases of October, we have the cost of purchasing at that moment. So again, if we perform the calculation, just to be a little bit more detailed for your help. Okay. In the meantime, I guess you are doing the calculations, right? Or not? Because this is something that either way we have to perform. That is $57,800 in case there is some mistake, because I'm doing many things. Just please correct me. Feel free to correct me, okay? So this is what we have as an information about the cost of sales. That means that right now the cost of goods sold at 311, that will be equal with 40,000 plus 57,800. The total sum is $97,800. So we calculated, according to the FIFO method, the cost of goods sold at 3 November. We continue. The next date that we have as an information is 20 November when we are purchasing. 20 November, because there is purchases, we can continue the same structure of information. Actually, we are purchasing 4,800 units at $18. So 4,800 units at $18 per unit. That means that the total cost of purchases in this moment, if we make the calculation, it is $86,400. That is the amount of purchases at this date. That's all for the 20th of November. And then we have the next stage of transactions. The last one is 10 of December when we are selling again. So 10 December, we are selling. So we have to calculate, related to inventory, the cost of goods sold of 5,300 units, if I'm not wrong. Let me check again. Yes, 5,300 units. Now, where do I take these units from? This is the question that I need to ask to myself. So, first of all, I'm going to sell what I have earliest in my inventory. Remember that from the purchases of October, 5,100 units, we already sold 3,400. That means that we are left with 1,700 units. In brackets, I will show what does that mean. 5,100 units from October. We already sold 3,400 in November. What we are left with to sell right now, it is 1,700 units. That is with a cost of the purchases at that date, of course, $17 per unit. And if we make the calculations, I don't know if that is clear, but please think about it and let me know. Okay, we have here $28,900. So first of all, to calculate the cost of goods that I'm selling, the inventory that I'm selling, I will start with what are the units that I'm selling right now. Remember that we have some units left unsold from the purchases of October, that is 1,700 units, and the others that I will sell now, because we are selling 5,300, the rest of that is 3,600 units. How do we know that that is that much? Because 1,700 plus 3,600 will make in total 5,300. Now, this is of the from purchases. Next purchases after October, the next purchases are in 20 November, right? So from the purchases of 20 November, 3,000 units with the cost of $18 per unit, as we know the cost of purchasing was at that date, okay? So 3,000 multiplied by 18, okay, will have a cost $64,800. That means that the cost of goods sold at 10 of December will be equal with 28,900 plus 64,800. The total cost will be $93,700. So we perform the calculations that we need to represent what we are asked from the exercise, the ending inventory and the cost of goods sold. Now, the cost of goods sold at the first transaction is this one. The cost of goods sold at the second transaction is this one. Can we calculate the ending inventory, date 13 of December, the ending inventory is how much? From our last purchases, which were 4,800 units, we have already sold 3,600 units. So ending inventory is equal to 4,800 less 3,600. That is equal, as far as we can see, with 1,200 units. Each of them will be valued or assessed with the purchase cost of the last purchase, which was exactly $18 over here. So multiplied by $18 per unit. And if we calculate the ending inventory, 1,200 units, each of them has this cost over here. We can have the value of the ending inventory, $21,600. So now we have all the pieces of information that we need to know. Let's have an answer to our requirement. On 31st of December, the ending inventory cost is $21,600, whereas the cost of goods sold is the sum between two costs of goods sold that we have calculated, 97,800 plus the 93,700. Both of them, 191 and $500. Okay, this is the answer to the question. No, it is not mandatory. Do not bother, do not take time to use cent, to use the monetary values, because they will require a lot of time. For me, also do not use these units and so on. If it is clear for you, it's clear for me. I'm using units, I'm using dollars, I'm using all these explanations in brackets and so on, just to make it easier for you to understand. When you solve this exercise on Moodle, for me it's enough if you say, for example, 500 multiplied by 17, that is equal to this one. If you only make this calculation for me, I will understand, okay? Again, I'm using units and everything just to explain it more clearly. But for me, in the Moodle, it would be enough if only you showed how you derived a certain value, okay? So thank you very much. In this case, I have the possibility to prove if my work is correct or not. You remember this equation here? That should always be true, this one. So you have the chance, dear students, to check yourselves. Is it true? If it is everything true, then you have not performed any mistake in your calculations. So what is the value of beginning inventory? It is $40,000. We put that there, $40,000 plus. What is the value of purchases? Purchases we have calculated as the sum of 86,700 plus 86,400. Both of them will give you if you make all the calculation, I'm just putting all the values, 86,700 plus 86,400. That would be equal with cost of goods sold, which we proved 191,500 plus the 21,600, which is the ending inventory. Again, ending inventory here, cost of goods sold over here. Please try to prove that this is correct. If the two sides of this equation are equal, you are correct with your calculations. If you find that the left side over here, beginning inventory plus purchases, is not equal to the right side, cost of goods sold plus ending inventory, it's not correct. Again, this is not required. Equation of inventory not required. It is only for you to prove yourself right. I will not ask that from you, okay? So we have a question from Erica. No, it's not okay to use the method you prefer. What do you mean by method you prefer? During tutorials, we used another display because we were using Excel. okay? And using Excel, it's pretty easy. I will cut and paste Excel solution later when I post this in Moodle. Right now, you are going to perform the calculations in a page similar to this one on Moodle. No Excel allowed here. So you are, I guess you have no choice but to follow the way of calculations that is followed here. You have to resemble and to show for each date what is going on. So this is something that you need to do, okay? Whereas if you are asking for the method either FIFO or average method, that would be specifically stated in the exercise. In this case, we are following the FIFO method because this is the method allowed by the company. But if in the exam you will be asked about the average method, you should follow the average method as well, okay? So again, the display should be in function of your own comfort and your own freedom to show everything, but in a way that it is also comprehensible for me. Let's see what Erica means by method. Oh, okay. Of course, you can instead of using multiplications like this. Okay, Erica, you can use multiplication like this, or you can use the add sign over here. Whatever you feel free. Whatever to. Yes, you can do that. What I understood about the word method was either FIFO or average. That is not for you to choose. That is decided by the exercise. So again, use whatever kind of display that you need and feel comfortable to, but be careful that for each transaction you have to show the date and you have to show the calculations. How did you arrive at the figure of the ending inventory, beginning inventory, purchases, and cost of goods sold, okay? So any other question regarding the inventory exercise? Again, one exercise about inventory will always be there. It will be in the exam tomorrow. So make sure you understand what is going on right now. Any question related to that? Okay. In case there is no question, I would like to continue with the cash flows. Okay, this is something that, as I mentioned during the presentation, the exercise is about the cash flow. I suggest you to leave that for the end. I suggest you to leave that as a last resort because usually the exercise on the cash flow, not that we want to, but usually it's complicated. It's not easy to follow. That's why I am suggesting to leave that for the end. What we have here, we have the balance sheet information and the income statement for the year ending in 2019 for a company, for a certain company. And we are required to calculate the net cash flows from operating activities using the direct method. So as I said, you are not going to be required to prepare a full cash flow statement, but at least one section. Cash flows from operating, financing, or investing. So, having to follow the direct method, I will start with cash flows from operating activities. I will start with the first item in the cash flows from operating activities under the direct method. Usually the first item here is cash collected from the customers. So cash collected from customers is the first item that we need to show over here. In order to show the calculations, I'm not using the brackets, but I will use the end notes in asterisks like this. So how we calculate the cash collected from customers is if we start with the sales revenue adjusted with the change in accounts receivable. Okay, so this is the basic linkage and equation that we have shared. And right now we will have sales revenue minus, we see that we have an increase in accounts receivable. That means that we have collected less money. So sales revenue less the increase in accounts receivable. The sales revenue is $250,000. I'm not using anymore the monetary items, not to distract you. Minus the increase in account receivable by 2,500. That means that the cash collected from customers is $247,500. So we put that right here in the statement that we are preparing. $247,500 over here. This is cash collected. That means that it is a cash inflow coming in the company and will be shown with a plus sign. So again, we are required to calculate the cash flows from operating activities. That means that we start with cash collected from customers. Cash collected from customers is equal with the sales revenue adjusted with a change in accounts receivable. If it is easier for you to follow the formulas, that would be sales revenue plus account receivable beginning less account receivable closing or ending balance. In other words, that means that, to put it more simply, sales revenue less the increase in account receivables. Whenever we experience an increase in account receivable, that means that we are collecting less money. Out of the revenue for the period, 250,000, we are collecting 2,500 less than that. That is the increase in account receivable from one year to the other, as you can see. And that represents the amount of cash collections. Okay? The next item in the cash flows from operating activities is cash paid to suppliers. Again, to show the calculations related to cash paid to suppliers, I'm going to use the space over here. So cash paid to suppliers will be equal, following the formulas that we have shared together, cost of goods sold adjusted with the change in both inventory and accounts payable. Okay, so let's think about that together in order to put our logic into the work over here and to find what has happened. Okay, so cost of goods sold is how much? If you see the net income statement, the cost of goods sold is 160,000. 160,000. Okay. Good. So the next adjustment that I need to do is the change in inventory and then change in accounts payable. Now think about that. You are selling this amount of money, but in the meantime, the inventory is decreasing. So it is a decline in inventory. That means that you have purchased less than you are selling. Because you are using or expensing the inventory from previous year, and that means minus change in inventory. Change in inventory, in this case, I'm putting that in brackets, is 3,000. Again, why is that a minus over there? Because the sign is very important. It is a minus because we are decreasing the inventory. Cost of goods sold is 160,000. The fact that I'm decreasing inventory means that I have purchased less than the amount that I sold. And therefore, I need to deduct the change in inventory. Okay? Let's see what happened in accounts payable. We have an increase in account payable. That means if we are increasing our liabilities, that means that we are paying more. Less change in accounts payable. And the change in accounts payables is as well 5,000. Now, if you make the calculations, 160,000 less 8,000, you would find $152,000 over here. Remember that the cash paid to suppliers is cash outflow. That means that we have to include that with a minus sign over here. So again, we start with cost of goods sold and we perform or we adjust that amount. We change in inventory to reflect the fact that we are purchasing less. And then the fact that we have an increase in the accounts payable means also that we are paying less because we have more liabilities right now. We have paid less than we have purchased. So again, the minus sign over here, this is the cash paid to suppliers. Okay, the other item, if you can see the depreciation expenditure, maybe we will use or include later on. The other expenditure that we have here are 35,000. So we include another item, other expenditure paid. Now, as there is no information about any non-cash part of these other expenses, I just say that the payments related to other expenditure are the same exact amount as other expenses over here. The last item relates to the taxes, income tax expenses paid over here. Now again, this deserves some moment to clarify because we have income tax expenses, 12,000, but we also have an income tax payable, which has been decreasing from one year to the other. When we have a decline in a liability, that means that we are paying more. So be careful to keep this in mind. So let's see how we calculate the income taxes. Income taxes paid are equal to the income taxes expenses plus the change in income tax payable. Again, put your mind into work and relate the figures to each other. You have the income tax expenses 12,000, okay, plus. What about the change from 2,500 in the beginning? The liability related to income taxes has declined to 1,000. That means that you are paying the difference during this year. During this year, except for 12,000, you are also paying the difference in change in income tax payable, that is 1,500. And that means that you are overall paying $30,500 in taxes this year. And you put this in 13,500, you put this over here, and so we have calculated the cash flows from operating activities. If you just collect them together and make the necessary calculations over here, okay, so if we can summarize the collections, 247,500 minus the cash paid to suppliers, 1,500 minus the other expenditure paid, minus the income taxes paid over here. Okay, I have this amount, $47,000 positive cash flows from operating activities. Okay, so this was like the solution of this exercise. Of course, what you will have in the exam is not expected to be the same exercises here, but it is something related to the cash flow statements. And also I wanted to say that you may have within one exercise one or two more requirements. For example, another normal requirement for this kind of exercise would be to comment on the cash flows. Are they positive? Are they negative? And what does that mean for the company? No calculation, just interpretation of the cash flows, okay? So we have a question in the chat and okay, we answer that. Because we are not given that information, Rebecca. Actually, I am so agree with you. I agree with the question of Rebecca a lot. Because we are not having any information, usually we are said here, compute or calculate the net cash flows from operating activities using the direct method. Depreciation is included in, and then it gives you some information. depreciation is included in cost of sales, or depreciation is included in other expenditure. We were not given this information, and therefore we were not assuming unnecessary stuff, okay? But in case depreciation is included, I'm just assuming, in other expenditure, okay? What will be the difference? If depreciation is included in other expenditure, would that make a difference? Will that make a difference? Answer to Adela. Adela, actually, you need to show how you have calculated, for example, cash collected from customers. Of course, I will not require from you to show all this long equation, formula, sales revenue plus this and this, but if you at least show me this amount of money, so you start with 250,000 and you deduct the changes in account receivable, so I can know that you have arrived at this result over here. If you only put the final result like this in a statement, I am not very sure how you calculate it, how you perform the calculation. This is for your help. Remember this. Let me add something. This is for your own help, because sometimes you may make a mistake, a small mistake. For example, some of you, instead of minus, put this a plus over here. And suppose, just assume that I am determined to give 2 points to these calculations. Instead, in case you have made any mistake, and instead of minus you put a plus, I may decide not to give 2 points but 1 point. So when you show the calculations to me, I know the logics that you have used, and I may assign the points accordingly. I don't know if you get that. So in case you show the calculations, that's good for you, because it will help me to evaluate you better. Okay, Adela, so please have this in mind and try to show the calculations, because it is for your own good to make you evaluate you better. So for answering Rebecca again, in case you have this other information, the depreciation, for example, is included in other expenditure, you will say over here, other expenditure paid will be 35,000, depreciation is 15,000, minus 50,000, that will be equal to 20,000 payments for other expenditures only, okay? But in this case, no assumption was made. So therefore, I did not include depreciation anywhere, assuming from my own brain, from my own mind, where to put the depreciation. In case you have a similar exercise in the exam, I will make sure that I will be very clear about the depreciation, where will it be included, okay? Any other question, please? Okay. If it was included in the cost of goods sold, right here, the formula would be cost of goods sold adjusted with a change in inventory and account payable, and adjusted with the effects of non-monetary expenses, or let's summarize it, items as well, because except for depreciation, you might have, as we said, provisions, loss or on sale of fixed assets, and so on. So another adjustment that you should to include here, it is for depreciation. You start with cost of goods sold. You reflect the adjustment for change in inventory with minus, because we explained that. We include the adjustment for change in account payable with a minus, because we explained that. And we also say minus the depreciation, because this is not payable, will not be paid. So instead of 152,000, it will be 137,000 to reflect minus 50,000 of depreciation as well. Is that more clear now? Okay. If it was a gain on disposal, and if the gain on disposal was normally included as it is, Usually on the other expenditure it doesn't make much sense, but if it is included in the cost of goods sold, that would be plus gain on sale. Plus gain on sale. Why? Because we have included not touching or not affecting the cash, and that means that you have to include that as well. But trust me, you will not have to do with gain on sales, Adela, in the direct method, okay? In the direct method will be with a plus. It's not a payment, it's not a receipt, but it's an adjustment. Okay. Any other questions? Regarding the last exercise in the exam, it will be about the ratios. Okay, so in case you have any question related to the ratios, I'm here for some more minutes. Okay, so as we said, if there are any questions from any other thing that you want to ask, whatever, probably the exercises on the on the financial ratios are pretty obvious and simple. You are going to be offered with some information. You are going to be required to calculate some ratios and to interpret these ratios as well. Don't forget the exercises with the effects of various transactions on ratios. Okay, that is very important, and certainly you will have one exercise like that, or at least one requirement in one of the exercises will be related to the effects of various transactions on ratios. Okay, so for example, you are going to calculate return on equity, interpret return on equity, and then another requirement, how this transaction, buying or selling or receiving or paying, something like this, how this transaction is going to affect return on equity, with a plus or with a minus. Okay, questions? I'm right here in case you might want to ask something. The exam will start at 9 o'clock, Francesca, because it's good for you to be a little bit earlier at SAS, so you can be arranged in your classes and open your laptops and start right away. So yes, you will have access to SA internet connection. About overcapacity, Elisa is asking. Okay. When we have overcapacity, there are no expenses that we can charge on them. When you have overcapacity, you are manufacturing more items. So you will spend less for each of the items because you are overproducing. That means that each item that you are producing will be going to cost less. The same amount of fixed expenses is going to be allocated into more items. So there is no over expenditure, it is under expenditure. Yes, I saw the message. You have to be at 9 o'clock. That means that you have to be at 9 o'clock seated in your desk and opening your computers ready for the exam. Of course, you can start at 9:30, but that would mean more time not actually consumed as it should be. Okay, so please make sure that you are at 9 o'clock, you are ready to start, not entering doors, but seated in the class and ready to start. Okay, thank you for your questions and the opportunity to clarify anything. Any other thing? Yes, it will be. I have a question that is asked to me, not for everyone. Will it be specified, the method of preparing the cash flow statement? Yes, it will be specified, either direct or indirect. So it will be clear. So once again, 10. Emanuele, I just explained this for a previous student, I guess. In order you do, in case you do not show all of this over here, okay? Just assume that you prepare the cash flow statement, the section from cash flows from operating activities like this. In case you do this and you have made some mistake, for example, you have these values that are not correct, okay? I'm just assuming. In case you have done, I apologize, I have people in office. So in case you are not quite correct doing all the calculations over here, I'm just assuming, and I do not have any explanation, I will give you for this 0 points, okay? And I'm sure you do not want that to happen. But in case you have made any mistake, but you have provided the explanation over here, and of course you have made mistakes over here in these values, but when I have a look at the calculations, I see that, oh, okay, you've just made a small mistake here. Instead of minus, it's a plus, for example. And instead of 0 points, I will give you 6 points or some other points as well. So providing the calculations, it's good for you, not for me. For me, it's easy. The less information, okay, the less information I have there, I have there, the best it is for me, because this means that I will not lose a lot of time to clarify and to see all the details. And if you are wrong, 0 points. But if you have provided the calculations, it's good for you because it will help me to evaluate you more correctly, okay? So please do that. Of course, in case you have not provided the calculations, I will give you some points, of course, but it's good to have all the information shown there. Okay? Any other thing, please? Something else that I may help you with? You are free to continue to ask me in email. Even tonight, this evening, I will sit down and try to help you in case you have another question later after I upload this material on Moodle. In case you do not understand anything and you want to ask, please let me know, okay? I will be happy to help you. Okay. Yes. Diluted earnings per share, right now I do not have any exercise prepared to solve, but you can, Elisa, you can have a look at the exercises that we have solved before about the diluted earnings per share, the ones that we have shared in our tutorials,